At the end of the day, it does not matter whether you're buying a $200,000 house or you're buying a $2 million house. We all have the same questions and concerns and anxiety. Is January a good time to start the home buying process? I guess it depends on when you want to buy, but I would say, yeah, probably. Right now is the best time to start doing it because the grass is going to start turning green around March. We're going to start getting some tax return money. More properties are going to be available on the market. So now's the best time to start kind of like resetting and regrouping and trying to figure out a really good plan for you. So you have confidence, you got clarity. So yeah, January for sure is a good time to start planning a home buying process. What should I do financially before I even think about buying a home? I think that you should make the decision on whether you're ready or not. This really isn't a feeling of being ready. It's more of a decision. And so you need to make sure, do I feel comfortable about my income? Do I feel comfortable about the location? Am I ready to create a permanent presence in the community that I'm living in? Am I able to afford the payment that I think that I can? How early is too early to talk to a lender? I don't think it can ever be too early to talk to a lender. I mean, if you're trying to make the decision on whether it's right for you to buy a home, you should probably have all the information in front of you to make sure you're making the best decision for you and your family. So it's never too early to be over prepared. Should I pay off debt or should I save money? So I would probably say it depends on your situation. If your credit score is fine, right? And you're just thinking about like, should I get some debts removed or should I put that money in the bank? I would say keep saving money, keep putting money in the bank because you can always pay off debt at closing. So if you have income issue where you have too many debts and you don't necessarily qualify, you can always pay those debts off at closing. And sometimes paying off a debt may not help your score, depending upon if it's an installment debt and the length that you've had it. Obviously, paying down revolving debt is going to help you, but funds to close are important and a down payment is important. So I think keep saving money and then through the plan with your lender, y'all can decide when it's best to pay off debt. How much does credit actually impact my monthly payment? I would say not as much as you think. That the difference between a 600 credit score and a 700 credit score is probably less than $150 a month. So if you're thinking through your full budget and what your monthly payment is, and you've got your installment debts and your credit cards and your student loans and all the other expenses, it's not a deal breaker. And so I wouldn't worry about trying to get my credit score super high to buy a house. It's not that big of a factor in your monthly payment. It could impact your eligibility, right? Depending upon the strength of the file when you look at all the factors together, but your score is not that big of a deal, really. Can I buy a home if my credit is not perfect? 1000% you can buy a home if your credit is not perfect. I can't tell you how many people we've been able to help when they thought that they couldn't do it or they've been told no before. Your credit is only one piece of it, right? There's income and assets and your debts. You have to look at the whole narrative and see how is there a way to design it. And when you work with a lender like me who's got thousands of loans under their belt with experience in helping people achieve the goal of home ownership, your credit score is not that big of a deal. Does checking my credit hurt my chances? Not if you use a soft pull, right? So every loan that we work on, we pull a 3-bureau soft pull out of the gate, right? So we don't actually impact somebody's score at all because we're just doing a review. We still get the scores. We still get all the data that we need. We can even run the electronic approvals that we need on all different loan types. So when dealing with a lender like me, you don't actually have to worry about your credit. But in reality, your score probably only changes 2 or 3 points when you have your credit checked. And that score change isn't even going to happen until 30 days after you have the hard inquiry pull. How much money should I realistically have saved? Realistically, I probably think you should have about 5% of the sales price saved in the form of a down payment. But if you're getting a gift from a family member or a relative, or you're planning on doing down payment assistance, you don't necessarily have to have very much money saved at all. I mean, lots of programs allow just for $500 as you're out of pocket, depending upon your credit score and the overall strength of the file. So I wouldn't wait around to try to save the money. But if I was thinking through, okay, if somebody had 5%, how likely is it that they're going to be eligible to buy? That's a much better compensating factor to have your own money and maybe a month or 2 in the bank as reserves after you buy the house. So I'd say about 5% should be good to save. Plus it documents that you've got the ability to save, right? You've got a new mortgage payment coming. Have you ever made that mortgage payment before, or have you ever been able to make a more expensive payment and still save those funds? So it's a good learning lesson to be able to set money aside and start to save, because owning a home is not for free. There's gonna be expenses that come along with it. What counts as acceptable savings for a lender? That's a good question. So money in your bank is not necessarily always going to be acceptable, right? They're going to be looking for large deposits, typically anything more than 50% of your qualifying income. They're going to be looking at that. Money that was borrowed typically is not available for eligible funds. Money that came from obviously illegal sources is not good, right? But typically anything in your checking or savings account, anything in a brokerage account, your retirement accounts are good sources of funds. Even gifts from family members are a good source of funds to close. Bonuses and commissions and other type of variable income like overtime or tips or different paid by the day and stuff, those all absolutely count as income, but only if you've earned it for the length of time that the loan program says. Generally speaking, you need to have a 2-year history of receiving those types of incomes. There are some exceptions to the rule that says, hey, if you've been getting it for a year and less than 2, we could possibly use it, but we need to look at some other factors in there to make sure, did you do this in a previous employer? Did you do this in a previous line of work? Same industry or same field? So generally 2 years, but there are some exceptions, but absolutely bonus income and overtime and commissions and all those variable types can be used as eligible repayment income. What happens if my income changes recently? So that's a good question. So the income is what the lender's depending upon, right? So every lender, when they're looking at a loan, it's always like stable, predictable, likely to continue. If you change your income source, it's not necessarily a bad deal, but you need to make sure that it's in the same line of work, right? Because that could be an issue for the loan, meaning you're doing something totally different than you've ever done in the past. And then also the way you get paid. If you used to be paid a salary and now you're getting paid a commission and you just changed income sources, you just killed your loan because now you don't have a length of employment long enough to even use that income. Why do lenders look at my income differently on my tax return? So great question. So self-employed people typically make more money, right, than they actually declare on their tax returns because the IRS allows you to deduct a lot of expenses from your gross income or your taxable income. So on paper, your qualified income may be less than your actual income. And that's not the lender's fault. It's the way the guidelines are written. There's different agency guidelines for conventional, for FHA, for VA. So depending upon your income source, whether you're self-employed Schedule C, whether you are an 1120S, a 1065, a C Corp, there's all different ways. So it's important that you work with a lender who understands self-employment, who can look to be adding back certain paper losses like depletion and depreciation, sometimes amortization, sometimes rental income can have one-time expenses that you can add back because they were a big repair. So working with a lender who knows self-employment and knows how to read tax returns is super important. What makes an offer a strong offer besides price? I think a strong offer besides price is going to be who your lender is. The reputation and the brand that lender carries in that community is a big deciding factor because there's a listing agent typically involved and they've been around before. So onlinelender.com, mortgage, bigbank.com, maybe they don't have the best reputation, right? So a local lender, somebody who has an authority in that presence is always going to be best because they know the market, they know all the players, title companies, appraisers, all agents. They can really help keep a deal together because communication is key when you're trying to get approved for a home loan. What happens on the first call with a lender? I think on the first call, it's a discovery call, right? It's going to be, what would it mean to you to buy a home? What are the most important things for you when you're buying a home? So the first call should be, what are you looking for? Have you ever done this before? What's our monthly payment should be? Is there certain concern about out-of-pocket costs? Trying to create that framework because at the end of the day, it all needs to fit within that model because you don't want to buy now and feel like you overpaid where your payment's a little bit too expensive for you or your out-of-pocket cost is more than what you wanted and now you feel embarrassed or upset that you did something that you said you wouldn't do. How do you help people who have been told no before? Love this. If I could put a cape on and do it 24/7 and get paid in high fives and hugs, I would do it. But the favorite thing to do is to take somebody who's been told no, they can't do something, and turn it into a yes. Through years of experience, 25 years I've been doing this, and through thousands of loans that we've actually closed, I've gained a lot of expertise. I'm very knowledgeable about the agencies and the guidelines, and I have decision-making authority within the company that I work for. So when you're talking to me and I get to look at the file, usually a fresh set of eyes is the key, and we can figure out a way to restructure the file and get that loan across the finish line and turn you into a homeowner. What makes the comp factor different, right? So great question, right? Essentially, I really care about how I make people feel. And at the end of the day, it does not matter whether you're buying a $200,000 house or you're buying a $2 million house. We all have the same questions and concerns and anxiety, right? We, the comp factor, remove the uncertainty from the equation. meaning we communicate, we ask questions, we zip it, we listen, right? Because we want to educate the buyer so they have confidence in the home buying process. That clarity gives you the comfort and it removes that kind of stress level that you have. So you have a really good plan in place. And then we deliver strong offers, right? So through years of experience and product knowledge and showing up every time, all the time, we're really good at getting people the money they need to buy the homes they want every time. No exceptions. And then throughout the process, with the way we make people feel, we create raving fans, 5-star reviews and everybody really saying, I'm so thankful that I chose you. I'm so thankful that people introduced me to you. I feel so much better with you leading the charge on this. That's what the comp factor is about.